Okay. Hello, Dan Snell here, founder of USABFA, and with me is Dr. Randy Shepard, Biz Tax Guy, but for us in USABFA, he's known as the USABFA official partner, official Biz Tax Guy, and we're going to have a regular program with Randy. You're going to be able to interact and ask tax questions, family business. Today, we're going to kind of talk about one of the key things that with USABFA really want to encourage, and we have a whole nother program, where we're brain hurricaning, I call it, bigger than a brainstorm, where we talk about small business ideas that you might have. You might have a hobby or something you're doing that you can include your children. And that's a whole nother person that talks about how you get that going from an idea standpoint. But once you get it going, that's why Randy is here. We're going to talk about today. Randy, all across America, and you've been, of course, let me just say this, folks. Dr. Randy Shepard knows, he has felt and knows the challenges. He himself grew up later in life, had a mother and father that divorce created a blended family of sorts that he was in. He went through the pain and challenges of divorce himself, and now as a grandfather, he also is actively involved as a father figure to, he knows what we're dealing with. So today, Randy, I touched on that one thing. We've got a whole group that's trying to inspire the creativity of starting a home-based, small, part-time business. Yeah. Maybe talk about, hey, somebody out there watching this, how could they create financially? What are the benefits from a tax standpoint of starting a home-based business as a family?
Well, thanks, Dan. It's a delight to be on USABFA and be an official supporter and vendor with USABFA, and thank God for an organization like USABFA that's helping blended families, because being a part of a blended family, although later in life, we need the support. And so I'm honored to share some ideas. Here's the thing. People, especially in our society today, people are looking for ways of making money. And oftentimes, Dan, people can literally take a hobby that they have, and I've seen this happen time and time again. We had a doctor who's head of ER here locally in Kansas City, and started with a hobby. We told him how to make it into a business, and today he retired from medicine, his medical practice as the head of ER at a major hospital, and has that business now to retire on. Families can, because Congress has spent billions of dollars in developing tax savings for small business owners, because they are the heartbeat. They are the largest provider of employees. And guess what? Blended families can hire their own kids. And we probably ought to get into something like that.
Yeah, that's what people want to hear. Because in a blended family these days, sometimes there's not just mom and dad and two kids, there's mom and dad and 3, 4, 5, 6, and be able to pay them, I guess you're going to say a 1099 payment, but that's a tax deductible expense. Go ahead and explain that, because that could be powerful.
Well, I can say this. We're speaking to a lot of blended families who probably have LLCs, and you can get an S election, and you'd want to do that if your net income was above $80,000 or more, and that would save you a lot of tax dollars. But you can hire your kids, and you just have them work the kind of jobs that are commensurate with their age. But what we do is we have you start a family management company, and believe it or not, Dan, they don't even have to have a 1099 or a W-2.
Because they're kids.
Because, well, yeah, the way that we do it, it's through a family management company, and we set up a special way to hire them other than through a W-2 wage reporting way to do it. And it's got a name. The IRS calls it a certain name, and I'll go over it with the family that is interested. And we usually have to document all this stuff, that they can actually pay from the S corporation to the kids up to $15,000 each, and they don't have to report it on the taxes. And the kids, it's a great way to offload some of the profits on the S corporation. Sometimes we can set those up that drip into 529 plans or Roth IRAs. And there's just it's an endless variety and buffet. of tax strategies that we could provide for blended families. But that's just one idea, is hiring your children to help you with age-appropriate jobs. And
Yeah, that's
so,
powerful. So you might have a mom and dad, one works, both works, but they start this business, and that's why you're the expert here, the biz tax guy. But the IRS let you within 3 to 5 years, you have to make a profit, but you can, as you said, up to $15,000 if you had some type of could be a lawn mowing business, it could be some type of a multi-level marketing business, it could
yeah,
be
that's
any
right.
type of business that a family could create. And I mean, that's a big number, but even if you take a third of that, even if you paid $5,000 to each child,
Yeah.
wow for them, because they don't have to file their taxes on that, right? Because they're
Well,
unless they make 15,000 or more.
yeah,
You tell
exactly.
us.
Because
The
that's the
benefit to the
standard
kids
deduction
is
for each
big.
person, right? A single
Yeah.
filer. But what I'm saying, and I'm so glad you brought up the 3 out of 5 years profit thing, because that's really kind of a misnomer. And let me tell you, the IRS says if you have a hobby and you try to make it a business and you have losses 3 out of 5 years, that's where Dan's coming up with this. And a lot of people ask me about this when they're starting their business. What if I have a loss 3 out of 5 years? There's a way around it. The IRS tells you exactly what you got to do to get around the 3 out of 5 year rule. And what that means is if you have losses 3 out of 5 years, they're going to not count it as a business. They're going to count it as a hobby. And so a lot of deductions will not be counted. So how do you get around it? Well, you have a business, and if you have a hobby, let me give you a great example. I had a client that called from New Jersey down here to Kansas City, and she asked me about a certain strategy. I said it wouldn't work for you. You're retired. You're not working. I started asking her questions. I said, "Do you have a hobby?" She goes, "Oh my gosh, I make these crossbreed these plants, and everybody wants my plants." And I said, "Well, do you sell them?" She said, "I do." I said, "Do you sell them for a profit?" She goes, "Well, I'm not going to sell them for a loss." And I said, "So you have intent to make profit, correct?" She goes, "Absolutely." I said, "That's the first requirement of having a business." So you really have a business of selling those plants, crossbreeding those plants, selling them. Now you can write up all of the material that it takes to grow it, and then because you do it out of your house, now you get to write off your. And let's say your growing area takes up 10% of your home, you can write off, and let's say we include your office, we can write off 10 to 15%. Let's say it's 15% of the square footage of your total square footage of your house. We can write off 50% of your mortgage interest, 50% of your real estate taxes, write off 15% of your utilities. And I mean, think of your utility bills, 15% of that. Any
Wow.
repairs and maintenance to the house. So if you added a fence, I mean, these are all old IRS rules that Congress spent billions of dollars to help small business owners. But if you're turning your hobby into a business, you want to have intent to make profit, and then have maybe a website and some business cards, and that'll get you started off right.
Yeah. And that's the whole website and business cards and creativity, the whole home business team that is, helping create those ideas. Then they come and talk to you. So they get help from one part of USABFA, and then they can come to Biz Tax Guy. Folks, you'll see it on the screen here. You can just type in, he's known as Dr. Randy Shepard, CFO Solutions, because he does a lot of large businesses or medium-sized to large businesses, but he does help individuals like you, especially with USA BFA, kind of a special project. But to find him, biztaxguy.com, and
Correct.
it'll take you to his website. But as Randy was saying, the deductions and the possibilities, I mean, mileage and vehicles, computers that you buy, a printer in that office, all the different things that can be used in a business. Yeah, that's a powerful deduction.
Dan, you're just setting me off on great. So you're bringing up some great stuff. Yeah. What if you use your car in your business? But if you need to buy, I just had somebody buy a car for their business, And number one, if you get it over 6,000 pounds, and this person they bought a BMW, okay, CX-7 or something, 5 or whatever it's called, and it was over 6,000 pounds. But if you buy a big SUV over 6,000 pounds, you can write it off 100% in the first year, or you can depreciate it over 5 years. But what I would do is I would literally create an accountable plan from your company that will pay you. The accountable plan is a reimbursement plan. So the government gives you 70 cents a mile for business related items. So if you're going to Walmart for business supplies, if you're doing whatever you're doing for your business, the IRS will allow you to get a write-off of 70 cents per mile. That means if you're going 2 miles, that's $1.40. You might as well throw $1.40 out the window if you're not recording it. But you can use Mile IQ to record it, things like that. But if you put it in your name and you create an accountable plan and pay yourself all of that, guess what? That income, because it's a reimbursement under the accountable plan of the Internal Revenue Code, becomes tax-free income to the individual.
This is powerful stuff. Folks, you're listening to USABFA, the Biz Tax Guy program, Dr. Randy Shepard. We'll be doing this on a regular basis because the new Trump tax laws has a lot of changes. There's also things from the standpoint of investment for college 529s, a lot of things that can be talked about, how that impacts financial. But today, we really want to kind of focus on, hey, let's get excited because, $47 a year to USABFA, less than $4 a month, I think you can find some deductions that would 10x, 10 times pay for what you invested in being a part of USABFA. So, Randy, if they want to get a hold of you, they can write. It's on the screen, but it's biztaxguy.com, correct?
It is Biz, because I do businesses primarily. BIZ taxguy.com. But can I make a bold statement and an offer to people that are thinking about joining? For $47, this is what I'm willing to do. Now, I charge a minimum of $2,500 for all of my clients to do a tax assessment. So when anybody wants me to do tax blueprints and save them literally tens or hundreds of thousands of dollars, the first thing they pay me is a tax assessment that can run anywhere from $2,500 to $5,000. But my blueprints are more expensive than that. Now, and it may not be for you, because here's the deal. I'm going to offer, and Dan, I'm going to do this only for USABFA members only that are verified and official. I'm going to waive the $2,500 tax assessment fee. So if they pay $47 to USABFA, they have the freedom to have a free tax assessment.
Holy Toledo. Folks, everybody thinks about taxes at the end of every year or beginning of every year. And thank you, Randy. That's awesome. And folks, you'll be seeing Randy a lot and often, and we'll have a lot of fun talking about things. We'll have the ability to have a chat where you can ask questions, text in questions. So it's going to be a great time ahead. We want you, all of the members of USABFA, to shine brighter and be thankful that we're part of something bigger than all of ourselves, because we're bringing together the best and the brightest out there. People like Randy and all the other people you're going to be seeing and are seeing on these podcasts. So thanks for being here. Randy, thank you so much for being here. And let's do some
I'm honored to be a part of USABFA. It's doing great things.